Welcome to earnings season, wealth creation investing, traders and investors. My name is Matthew Buckley. I'm the Chief Investment Strategist here at WCI, and it's going to be interesting, folks. Let's talk about history repeating itself. We're potentially coming into a really bad earnings season. And I say potentially because there's always room to surprise to the upside. For example, like an Apple, always tends to underpromise and overdeliver. But for the most part, history is going to repeat itself, folks. The same thing happened this time last year coming into the quarterly earnings. We had a very sharp decline, and we had some, Eurozone, EU issues that were clouding the market. So here at WCI, we feel the same thing is going to happen, but it's actually going to be a little bit worse. Why? Well, 42 companies have already kind of, telegraphed or pre-warned about earnings. And I'm not talking about mom and pop tire stores. I'm talking about Ford. I'm talking Procter and Gamble. Big companies have already telegraphed that last quarter wasn't so hot. Couple that with Friday's weak job report that sent the market down about 124 points, and it's not going to be a good earnings season. It's going to be a great earnings season for us here at Wealth Creation Investing because we're going to trade the heck out of earnings season in our Wealth Creation with Options service here. But folks, bottom line, cost cutting isn't just going to do it anymore with companies. You can't cut anymore. Worker productivity is at all-time highs, and you might think that's a good thing. That's actually a bad thing. Well, it's a good thing for the companies because, they're maximizing their employee workforce, but something's got to give here. So, folks, Alcoa kicks off officially, unofficially earnings season this afternoon after the close with earnings, and it's going to be pretty interesting. So the market's kind of sitting on its hands. It's also sitting on its hand because of this right here. Now, many of you are sitting here like, okay, key Spanish yield tips 7%. Folks, that's a big deal. And here's the issue. If you don't know what Spanish yields tipping 7% means, here's the deal. Spain is issues debt in order to try and get themselves out of the mess that they're in. And investors are saying, sure, we'll buy your debt, Spain, and we're going to take a little just north of 7% return to do it. That's huge. That adds to Spain's deficit and debt problems. It just compounds. It's a death spiral in the aviation industry. It's just going downhill, pulling tighter G's, and they're going to end up flying into the water, and that's not good. So the market's a little lower on that. Market's a little lower on, on the companies that have telegraphed earnings are going to be bad. And like I said, folks, it's going to be an interesting earnings season to trade. We're having a blast, actually, in the wealth creation with options model portfolio. Let's take a look at what's going on here. We have some great trades, and let's take a look at our performance. Let's take a look at since March 1st how one of our model portfolios has been doing here on about $50,000 worth of haircut. We're almost up $34,000, which is incredible. And on a day like today, that's down about 50 points, and the S&P is essentially flat, down 5 points. This is what you want your portfolio to look like: some light greens, some greens, some reds, some pinks. This is a hedged portfolio, folks. What's on the flight schedule for this week? Let's take a look at some kind of important, potentially market-moving events today. Well, here in the United States on Monday, the Federal Reserve is going to release consumer credit numbers for May. That's going to be interesting to see what the consumer did back in May and how they were spending. Now, again, that's a lagging indicator. That's May. We got June, and we're in the beginning of July here. So, consumer credit might be reported as great for May, but that's really not going to telegraph too much to us here. Also, ECB head Mario Draghi is going to be talking to the EU Parliament today. Nothing really huge out of that, folks. He's speaking in Brussels, and they came up with a new agency that's going to report to the European Central Bank that's supposed to supervise the 17 banks in the nation, in the EU there, the currency block there. What could go wrong? I mean, they have the EBA, European Banking, whatever the heck that stands for, that's based in London. They have the ESM, the European Stabilization Mechanism. It's amazing. They're just adding on. It's a Frankenstein. They're just bolting on problems on top of problems to try and solve problems, which isn't good here. On Tuesday, let's take a look at what could be a potentially market-moving event in the U.S. markets, and it's essentially the small business. It's called the National Federation of Independent Business. They're going to issue their Small Business Optimism Index, so it's going to be very interesting to see what small businesses believes going on here in the United States. Here on Wednesday, international trade numbers and wholesale trade for May are expected. That's going to be very interesting as well because guess what? With a strong dollar versus a weak euro, that's going to hurt domestic United States companies' export revenue. So that's kind of a big deal. So take a look at that on Wednesday. And then the FOMC is going to issue its minutes ahead of its June 20th meeting. Then on Thursday, some more interesting reports. Obviously, Labor Department weekly initial jobless claims. That's always huge. But here's also going to be a big one on Thursday. The U.S. Treasury is going to release its budget for June, and we're just going to get to see how big, our bloated Treasury Department is with buying our own debt. If you follow my blogs, it's I call it Operation Snake Eating Its Own Tail. It's going to end poorly here. On July 13th, Friday the 13th, the PPI, Producer Price Index, is scheduled to come out, and then the University of Michigan, is going to release its Consumer Sentiment Survey. So that's going to be a big one as well there. So a lot going on in the market this week. Obviously, like I said, we're taking it a little bit on the chin at the open this morning because of Alcoa and just because people are starting to wake up to the fact that we're going to have a poor earnings season. So make sure you stay tuned to Wealth Creation Investing. If you're not a member of our Wealth Creation with option service, I strongly recommend you get on board because we're having an absolute blast. We're hedged. We got some. We're long volatility. We're short the S&P in some areas, and then have some long positions on as well. Google comes out with earnings this week. A lot of big folks coming out with earnings this week, so it's going to be an action-packed week. And if you're going to trade live with me Wednesdays at 1 p.m., I strongly recommend you do it so you can follow along our model portfolio. Okay, got to run. A lot going on. Got to get back to trading and trading the heck out of this market because it's an absolute blast. So I'll talk to you on Friday, and I'll see a lot of you on Wednesday at 1 p.m. in our live trading session. Have a great week.